Greetings, members one and all of the Salivation Nation. 50 years later, they can't stop gold. Let's explore. On this very day, in 1971, 50 years ago, gold was temporarily removed from as the standard backing the dollar. Essentially, what happened was the Bretton Woods Agreement ended in 1971. The Bretton Woods Agreement was the first departure from gold. Essentially, the dollar was tied to gold, and every other currency was tied to the dollar. I'm going to be referencing an article here that I think was very well written from Kitco. Gold still remains relevant 50 years after Nixon ended the Bretton Woods Agreement. And keep in mind, it was only supposed to be a temporary measure. But we know what happens when government gets involved in these decrees and what occurs. 50 years later, but you know what? That does not stop gold. Gold market was completely transformed. So was our currency. In a matter of minutes after President Nixon decoupled the U.S. dollar from the precious metal. Essentially, he closed the gold window. Although gold is no longer an official global currency, analysts note that with everything that has happened in the last 50 years, the precious metal continues to play an important role in global financial markets and is seen as a store of value among central banks, governments, and investors. That's for sure. We've seen that even recently with a lot of these central banks accumulating more gold in their coffers because they want to decouple themselves away from the dollar. In the last 50 years, the gold market has evolved from a physical market of bars, coins, and jewelry to a paper market with the creation of a gold-backed exchange-traded products, of course, futures as well. As the investment landscape grows, companies are now developing digital gold products in fractional markets. In fact, there's cryptocurrencies that are supposedly backed by gold. We have ways to be able to buy physical gold through certain dealers and mints by getting a sort of a crypto-backed digital representation of that physical element allocated. Analysts agree that while gold has lost some shine as a monetary metal, it still remains a relevant asset for investors, although I would disagree with that statement because the Bank of International Settlements has labeled gold a Tier 1 asset. That's coming from the central bank of central bankers. How did gold go from this global currency to, well, an investment asset, which makes me cringe to think about that because it's really a hedge. And by the way, gold definitely still is money. It's just not currency. Let's look back. On August the 15th, 1971, Richard Milhouse Nixon made a televised announcement. And in that televised announcement, he told the American people and the world that the U.S. was moving off the gold standard. Before Nixon's announcement, the 1944 Bretton Woods Agreement allowed central banks and foreign governments to redeem their U.S. dollar treasuries for gold. While not an official gold standard, the Bretton Woods Agreement made the U.S. dollar the world's reserve currency, and gold was pegged to the U.S. dollar at $35 an ounce. Starting into the mid-1965, during that year, because of rising inflations, nations worldwide were quickly redeeming their U.S. dollars for gold. By the way, is around that time we saw nations start to abandon utilizing their pocket change being made of silver. When the Bretton Woods Agreement was signed, the U.S. controlled about 2/3 of the world's gold supply. The U.S. had 20,000 tons of gold, and it fell to 8,000 tons. Can you imagine that? We had so much more gold than we do now. The U.S. gold reserves were going down way too fast. So Nixon had to step in and do something, said George Milling Stanley, who's the chief gold strategist at State Street Global Advisors, in a recent interview with Cant News. Because of major inflation, there was a discrepancy between the official price of gold and the free market price. Countries, especially in Western Europe, were perfectly happy to turn their dollar assets into gold, he added. Milling Stanley was a journalist working for the Financial Times in the 1970s and remembers covering Nixon's announcement. He added that the global redemptions were putting U.S. solvency at risk. Although gold is no longer a reserve currency, Milling Stanley noted gold provides the best low-risk returns than any other asset. In the last 50 years, from 1971 to date, on the compound annual growth rate basis, gold has given you a capital appreciation of close to 8% a year, he said, which is not too shabby for something that doesn't pay a coupon or dividend like a bond and a dividend like a stock. In a more recent history, Milling Stanley said that in the last 20 years, gold has seen its value increase sevenfold, solidifying its role as an essential global asset. Gold's historical promise is that it will enhance your returns and reduce your volatility. In other words, where this is guaranteed every year because of the Federal Reserve Act of 1913 to lose value, well, we can take these, essentially cotton fiber, which is known as paper dollars, brush them aside because this is really where it's at in terms of wealth preservation. And that is an amazing thing. And it's done that for thousands of years, no matter what policies the United States put into place or any other country or any global institution either. Gold's historic promise, again, is that it will enhance your returns and reduce your volatility. It improves your Sharpe's ratio, and that has to be the goal of every asset allocation in the world, he said. Thorsten Polet, chief economist at Degussa, said that the Bretton Woods Agreement was destined to fail because it wasn't a proper gold standard. He added that the political will to maintain a pure gold standard ended after the First World War. Governments needed money to pay for the war efforts. The gold monetary system got in the way of government spending, he said. And Bretton Woods was only a half-hearted attempt to make a gold standard. Right, it really wasn't true. And that's what it is. Gold constrains the powers that be. And they don't like that. So they must abandon it. And boy, they did that in quite a swift fashion, especially in 1971. Now, given that being the case and that premise, don't hold our breath for waiting for a new gold standard. Milling Stanley said it's unlikely. He added that even the question is irrelevant in today's economy. And there's not a government in the world that would be prepared to accept the kind of rigorous discipline that the gold standard implies. Governments have had 50 years where they have issued currencies of their own will, and that is not going to change anytime soon. In fact, the closest thing we've come to any politician mentioning a gold standard is in 2016 when Ted Cruz mentioned it as merely a part of a rules-based monetary system. John Reed, chief gold strategist at the World Gold Council, said in a recent interview with Cant News that he doesn't expect the world to return to a new gold standard anytime soon. He added that not only is there no political will to make gold a global currency, but it could upset the entire global economy. According to stats from the World Gold Council, on average, the world's annual gold supply increases by about 1.6%, which means that the money supply couldn't grow more than that. According to data from the World Bank, the U.S. money supply grew more than 17% in 2020. The Federal Reserve and U.S. government have pumped trillions of dollars into the economy after being devastated by the COVID-19 pandemic. Reed said it would be difficult for the global economy to grow with a restricted money supply from a gold standard. A gold standard would effectively put us in a prematurely restrictive credit, deflationary environment. It would be a huge limitation, he said. As to what it would take to change the current environment, Reed said that the world would have to see a complete lack of faith in all global currencies. And that's unlikely to happen anytime soon, especially for the dollar, because it's the best of the worst out there. And we're printing these things like they're going out of style. Although it's unlikely that the world will return to a gold standard anytime soon, Reed said that gold will still play a critical role in financial markets. Although it is no longer a global currency, the World Gold Council expects gold will be a significant asset in central bank reserves for the foreseeable future. I don't know what the future will look like for the gold market in 50 years, but absolutely I believe it will be regarded as a valuable asset. And so, but I'm going to back up a little bit because I do think that it could work to some degree. Doesn't mean we have to just wholesale switch from this to this. I believe that you can work your way into it and discipline your currency. Heck, that's what tapering is about. You taper back. You're printing. You do that first. You get some things under control, and you have this as part of a rules-based monetary system, as Ted Cruz suggested. There are ways to do it, but they just don't want to do it. They use that as an excuse. Going back to the future, Reed says that I don't know what the future will look like for the gold market in 50 years, but absolutely, he believes it will be regarded as a valuable asset. Some economists are ready to give up the idea of a gold standard just yet. They're not ready, even if there's currently no political will. Pallad said that the investors can't ignore gold's extensive history as a currency and store of value. For thousands of years, gold was used as a currency, and we're talking about only the last 50 years. I think it would be unwise to think that we can rely on unbacked paper currencies forever. Exactly right. That's the thing that won't last, is these fiat currencies at the rate we're going. Something's got to give if you keep on with these loose monetary policies. A gold money system could be perfectly embedded into the free market forces. It's a perfect currency, he said. We would have smaller governments. We would have smaller taxation burden for people and businesses. I hope you don't mind me saying that, but our standard of living would be higher. And by the way, we're seeing it on a micro scale in some states that are literally adopting these gold backs, where essentially these gold foil notes are being used and passed around as currency to this very day, which I think is exciting to see. Pallad added that he could see also fewer global conflicts under a gold standard because nations would be able to value their wealth and economic prosperity with the same measurements. The Cold War would have been much shorter, he says. The communist experiments would have ended much earlier because gold money would not have allowed them to decouple from the world. That's an interesting point for sure. Although the chances of creating a new gold standard are extremely thin, Pallad said that there is growing interest in making gold and silver monetary metals again. In the U.S., only 9 states continue to maintain a sales tax on precious metals bullion. That's not true. There's many more states than that. I've covered that in a previous article. There's many more states that have a sales tax on precious metal bullion, but it is shrinking. In March, a bill was introduced at the federal level proposing legislation to remove capital gains, losses, or any other type of federal income calculation on gold and silver bars and coins. They should do that. It's a pretty big threshold, and we haven't reached the point where people are ready to give up on paper money, but the environment is slowly starting to change. As the technology grows, the easier it will be to use gold as money again. The time will come. And that's the thing. Even with Bitcoin and these cryptocurrencies, which have their own problems, even though they are decentralized, they do have issues and problems. Essentially, it's a speculative asset that is really the foundation of which is a bunch of energy that has already been expended. Whereas gold, the energy to expend to create one of these pieces here, an ounce of gold in your hand, you have this to show for it. It's not going away. No way, no how. Gold is money. In a sense, you could consider it hibernating money, but the very fact that the Bank of International Settlements has declared it a Tier 1 asset, the very fact that central banks around the world are accumulating it in greater fashion, trying to catch up to the United States, is their goal. If he who holds the gold has the power, and so therefore it's why Some of these even smaller nations are trying to increase their holdings of gold. That's the way you do it. And that's why I believe it is incumbent upon us to have our own gold in our own possession here, to be our own central bank, if you will, to preserve your wealth. Because that's what gold is about. And we'll continue to do that, whether or not we're on a gold standard or not. So 50 years later, after Nixon's temporary removal of the dollar being tied to gold, well, they can't stop gold, that's for sure. And they can't stop us from holding gold, and at least for now, they can't stop us from buying gold. Let me know what your thoughts are on this historic day. This is August the 15th, 2021, 50 years after Nixon ended that Bretton Woods agreement. We hold on. We have the power when we have the gold for our own wealth preservation. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.